Yeah. I should get up and do something about what I'm feeling today. 10 hours later, distracted, I doubt what I know is in place. I could be confident, bust my prerogative, glow full of grace. Turn right around from my prominence down.
All right. Good morning, good afternoon. All depends on when you're watching this video. This is Jevin Farrow speaking, the founder of Farrow Markets, and this is the first episode of Market Wars. I'm gonna try and drop videos like this every single Sunday or every second Sunday. Like I said, this is the first episode. I'm pretty sure, as you can hear as well, the sound quality is much better. So basically, before we get started, follow us on Instagram. Just bear with me, my network is a bit slow. Okay, so there we go. Our handle is Farrow_markets, and my advice is, if you're not under my mentorship program, check out our highlights under notes and also our gems. There's a lot of information in here which could help you in a sense of psychologically, because remember, trading is 70% psychological, 20% money management, and 10% skill. If you cannot control your mind, you cannot control your destiny here on earth. And remember, your account means nothing to your broker unless you press buy or sell. Okay, so that's something to keep in mind. Next, join our Telegram channel. I will leave a link for this in the description as well as for our Instagram. So basically, I just want to show you something. As you can see over here, I sent out the signal on V70, V25 one is, I mostly trade synthetic indices. And as you can see, here we are in profit risk-free. So before we get started, there's something I want to say. Don't be ignorant, right? A lot of you message me asking for advice. And then like I've sent everything into this public channel. This is a public channel, guys. If you honestly go under files, you'd find so many useful things, not only for trading, but also discipline, also on current events, world events. Remember, the news is fake. Follow the money grab. You have to follow the right sources. I always say this, everyone gets information, but we analyze it better, right? So like I said, join the channel. I will leave a link for it in the description, and let's get started. So first things first, I wanna talk about market makers and the dirty tricks, and some things you should look out for when you sign up for the broker. So for those of you who don't know, first of all, your broker's job is to take your money, right? Your job is to milk the broker. As you can see over here, given these sums, it's reasonable to assume that not all firms involved in the forex industry are playing fair in the sole interest of their clients, right? And we all can agree on that. So what does a broker do? What's a broker's role? Basically, a broker is basically a middleman between you and the market. So basically, whenever you buy, your broker sells to you. Whenever you sell, your broker buys from you. This is why it's called making a market, right? That's why we have market makers. So a few things to look out for when you sign up with a broker is, you have to make sure your broker is honest. You have to make sure that your broker is not manipulating orders. Your broker is not manipulating charts. A very good example of this is JP Markets, South African-based broker. And as you can see, they're getting liquidated. Number one, because they didn't pay out their clients. And number two, there was a lot of market manipulation involved. I just want to say this, for those of you who are under JP Markets, if you think they should still be in business, you should be in jail too. And second, let me rephrase. Let me just go back to the market makers. Here you have different brokers, right? As you can see over here, you have ECN and STP brokers. To be honest, a ECN broker, you might have seen this before. They usually require a very, very huge deposit, but that's because there is less manipulation and most likely a tight spread. So most likely ECN can be considered a book broker. A book brokers is basically brokers who get liquidity straight from the market makers, and they make their money based on commission, usually 5 cents on a 0.01 lot size, or they make the money on the swap. They also make the money on the spread. For example, let's say your spread is 1 pip on a pair. The liquidity provider, for example, provides the spread to them at 0.4 pips, right? So then they add 0.6. So they then make 6 cents, or depending on your lot size, according to your spread. That's reasonable, right? Because I mean, it's the cost of doing business. How else will your broker make money? People brokers, for example, JP markets, when you lose money, they win. When you make money, they lose out. And this is one of the reasons why JP markets didn't pay out their clients, because people saw a loophole. Or actually, I know, okay, this is way off topic, but I will get to the analysis and so forth. It's just something I want you guys to think about. So basically, he offered people NAS 100 NASDAQ, right? A lot of you guys are familiar with that. NASDAQ pays a lot. The reason why a lot of people went to him is because, number one, he offered it at a very, very low cost, meaning a very, very low margin. So on a small account, you can place much more orders and make much more money, but also the risk is more, right? So let's just look at a few things to look out for when you sign up with a broker and how to take advantage of the clients. Number one, brokers will send you analysis or so-called news to induce you. If you actually go to our Instagram, you would see that one of our handles is induce, trap, banker profit. Because remember, your account means nothing to your broker unless you press buy or sell. So what do you have to do? He has to induce you, trap you, and then book a profit, right? So, and then, like I said, we did cover A and B book brokers. Fixed trading costs, like I said, very, very low margins. The best way to get a low margin is to have higher leverage, right? But the higher leverage is the more risk. But if you use the right lot sizes, like, you know, you obviously just use, you'll obviously trade properly, but just with a more open free margin, if that makes sense. The next thing is slippage and spread widening. So basically, on ECN accounts, like I said, there will usually be a fixed spread, or if your broker is honest, you'll usually have a tight spread. Like I said, they'll make money on commissions. So one of the ways you can also determine when a move will happen in the market is, for example, let's say Euro USD trades at 1.1300. Suddenly the spread opens, prices at 13100, but the spread, but for example, the spread is at 1.1350. Like maybe the spread opens up to 50 pips. XM does that. So that's something to look out for. Then bonuses on deposits. Don't take bonuses on your deposits because you will not be able to withdraw. Every bonus comes with terms and conditions. And not just that, most people make the mistake that if they get a bonus on deposit, obviously they have more equity, but then they enter on a lot size based on the equity and not on the account balance. But in reality, the broker doesn't let you trade based on the rules of the equity. You know, let me put it this way, your risk is still determined by your balance. The bonus is just a fictional amount added to your account, because I mean, how else are they going to get clients and attract people? Brokers need money, right? So that is just something I wanted to mention. Make sure you use an honest broker. I will also link links in the description to brokers I suggest and use. Very, very honest brokers. You can also you can just go on Google, look at the FSPs, look where they regulate and so forth and so forth. Another thing is, it's better to also, okay, I wouldn't say it's better to have a broker, a local broker, because look what happened with JP markets. It's better to have a broker where you have to actually test their withdrawals, right? And if you're happy with their withdrawals, obviously you should stick with them. So that's just something I wanted to mention, because we have news for the dollar on, let me just confirm the time or date. Okay, so this is for Tuesday. This news event, this speech. Usually on Monday, news events don't move the market. And also based on some of the rules I've learned when I was trading fundamentals, Mondays are off day for fundamental traders. And also the timing is off. According to the market maker method, this is not the worst time to trade, but like on a Monday, I wouldn't recommend trading on the side, because this is where you can expect fake moves. So this is an important event on Tuesday for the dollar. On Wednesday, we have NZD intraday decision. And then we also have GBP, manufacturing PMI services. They move the market. What else do we have? On Thursday, we also have intraday decision for the Swiss franc. So looking at the important events this week, we might be looking at the Swiss franc, the dollar, the pound, and the New Zealand dollar, right? So we have 4 pairs on our watch list. So this is also something I wanted to explain to you guys. So let's say there's something already prepared. As you can see, we have USD yen, GBP yen, Swiss franc yen, NZD yen. The reason why I go with the yens is because the yen is associated with the Asian market. So during the Asian session, there's not really movement. So like the yen is actually very weak compared to other currencies. Not economically, but in a sense of trading wise, right? Remember, like the charts and what's happening in the economy is 2 different things, because they can say one thing in the news, but in reality, like something way different. So a simple thing I want to explain here is a matrix correlation. So this is also how I set up my watch list for those of you who asked. A watch list is basically the pairs I'll be looking at the coming week. So in this example, I have USD yen, pound yen, Swiss franc yen, NZD yen. These are also major currency pairs. Now, if you've studied Steve Morrow, PTMM, Peter Market Maker, one of the rules is, or one of the, okay, I wouldn't call it a theory, but one of the things you keep in mind is if they're holding the majors, they're moving the crosses. So meaning, let's say they hold USD yen and GBP yen. If I remove yen and yen, I'm left with GBP USD, right? So if there's no movement on these 2 pairs, I might get a movement on GU. If there's no movement on USD yen and Swiss franc yen, I might get a setup on USD Swiss franc. If there's no setup on pound yen and Swiss franc yen, I might get a setup on pound Swiss franc. And same thing, if there's no movement on NZD yen or USD yen, I might end up with a setup on NZD USD. And this can go on, you can also end up with NZD Swiss franc. You can also end up with, let me just confirm. Oh, you can also end up with GBP NZD. Right, so you should have more or less, yeah, like I said, there you now have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Now you have 10 pairs you can be looking at, but only according to what's happening right here. You know, so remember, trading shouldn't be difficult, should be easy, should be very, what's the word? It should be very comfortable. It shouldn't put you under pressure or feel like you can't get anything done. So that's just some theory and some gems to be looking at. And also, like I said in the beginning of the video, don't be ignorant, you know, just knowledge is the most valuable commodity out there. And you can do all these things, or you can work very hard, but if you don't have the right knowledge, it's useless, you know. Einstein once said insanity is doing the same thing over and over, expecting different results. Now let's get to the charts. So one of the main, so I'm gonna do a top-down analysis on USD yen. I'm gonna break down the whole year, what has happened so far, the zones to be looking at, and also some theory. So this is a daily chart, and as you can see, this is the beginning of 2020. This is also called the quarters theory. I have a video on this on my channel. I will leave a link in the description for you to go check it out. If you don't understand this, I suggest you go check it out. And then what else did I mention? I also have a PDF for the quarters theory in my public channel. Like I said, the link will be in the description. So let's go to the first quarter. Now remember, there's 12 months in a year, and there's 4 quarters, which means every 3 months that's a new quarter. Like I said, just bear with me, my laptop is quite slow. Okay, so this was the beginning of the year, and in the beginning, so I'm gonna do this month by month, right? So be with me, so you can actually understand the anomaly behind what's happening. Let me just make these candles a little bit bigger so we can only focus on what's important. Like I said, just be with me. My network is quite slow. I don't know whether it's the Wi-Fi or my laptop. Okay. So this is the beginning of 2020, and this is Jan, Feb, and March. So in the beginning of the year, this was where market opened, right? So first you can see we formed a low over here, and we also formed a high over here. Remember, this is the month of June. Okay, this month of June. So from June, I mean from January to Feb. Sorry, my bad. January to Feb. This was the low, the first low, and then as you can see, market rallied a little bit, and this was then the highest high of Jan. So I'm gonna make this. I'll make this white, and I'm gonna make this color black. I hope you can see that. Wait, let me make it a different color. I'll make this pink. Still too dark. I want you to actually see it in case some of you have dark screens. Okay, light blue. I think that will work. So as you can see at first, there was the low of low. So this is the month of Jan up until here. Now notice how in Feb, how price broke this point, right? Forming a new high. So this now goes here. Okay, I'm not going deep into the analysis and the move. I'm just explaining how you can keep track of the highs and lows, because remember, market makers, they make moves at the high and low of the session, the high and low of the day, the high and low of the week, the high and low of the month, the high and low of the quarter, and also the high and low of the year. These are the zones you should be mindful of. Also, another thing to keep in mind is market makers make fake moves beginning of session, end of session, beginning of day, end of day, beginning of week, end of week, beginning of month, end of month, beginning of quarter, end of quarter, beginning of year, end of year. So usually, so let me put it this way. Here we have Feb, right? They're trading within the range, didn't break out of this point. So, okay, although it is a lot of pips, you know, just like, okay, let me move this back here so you can understand what I mean. So let's say this was the high, right? And here comes Feb, new month, stays within the range, So ideally, I would look for price to reject this point and sell, or come to this point, hold it and buy. Like I said, the fake market makers make fake moves beginning of month, end of month, beginning of quarter, end of quarter, beginning of year, end of year. Now, also I also teach this in the weekly structure. The breakout, the first breakout of the week, the month, the quarter, or the year is usually a fake move. So as you can see over here, we had 1, 2. People thought market was dropping. Let's actually just count these pips real quick. Like I said, also guys, this is called market wars. I'm gonna go deep into detail in the future why certain moves happened, breaking down the news that wasn't on the what's the word now? Breaking down the moves that wasn't in the mainstream media, right? So just from here up until here, that was more or less 109 pips, 114 pips. Now that's a lot of money, right? That's a lot of money. So it's understandable why people got induced there. Remember, as a fake move, beginning of month, right? And as you can see over here, market ranged. Notice how end of Jan came, market dropped again, right? So fake move end of the month. Feb came, market went up again. What a surprise. And then as you can see, when it came to last month's low, also the high of the year, okay, I'm gonna actually put this in here just so we can actually see it and keep track of it. Okay, so this is the high of the year. And then I'm gonna also put this over here as the low of the year. I know it's not, but I'll pick up what I'm trying to do here. You know, I'm taking you move by move, understanding how you can actually measure the highs and the lows. So when the move actually happens, you can actually okay, let me put it this way. For those of you who do trade the market maker method, sometimes you would see it, okay, you are on peak formation, high or low, level 3 MOW formation, but then like price doesn't hold the level, and price would then break straight through peak formation, high or low. But that's most likely because you didn't consider the other highs and lows of the other months, of the quarters, and also the highs and lows of the year. That's something to be very, very mindful of. So like I said, here comes Feb, make a fake move, beginning of month again. Price goes up. Now, like I said, remember the breakout is usually a fake move. So notice how when price broke up, price came back down. They only went up there for like 1, 2 days, and the next 3 days they came back into the zone. Now remember, this now becomes the high of the year. And this is still the low of the year. Remember that, right? But also in between this, you're gonna measure the high and low of the year. You're also gonna measure the high and low of last month, and so forth and so forth. So you can actually keep track. So, for example, I'm gonna draw a slight line up until the beginning of March. Don't get confused. It's okay. I'm just showing you the theory behind this. I really hope you're following me and paying attention. So now remember, you know that this is the high of last. Okay, so just put it in here. I'll make this red and slightly smaller. Oh, not that low, it's a high, my bad. So this is January's high. And this is January's low. I just want to say something. You know what? Sometimes like just looking at the candles and actually like going way into detail, like measuring everything, it's actually very interesting. You know, it's actually very exciting. So like I said, this line we use to measure the previous highs and lows of the previous months. Now this is Feb over here, and as you can see, like just notice something. Like this is the low. Notice how when price got to the low, it rejected, came back here, rejected, then broke through. Same thing here. Notice when price broke straight through, they came back to last month's high, and they kind of rejected and held there for 1, 2, 3 days, or 2 days before they broke the level, right? So very psychological. Another thing is, notice how you put this on a line chart. Here you have 1, 2 levels of drop, and still in Feb, but this now becomes the new low of the year. There we go. So this becomes the new low of the year. And this is obviously January's low. And like I said, I will drag this up until the end of March. So as you can see, the highs and lows play a very big role. Right. So now here we have the beginning. Oh, my bad, guys, my bad. This was the beginning. This is where okay, let me just trace my step back a little bit. Sorry about that. So this is the end of the month right over here. So notice how when they came to the end of the month, they kind of trapped. So whoever thought this was a support, you know, and bought from here and held it, like they didn't make money. The stop loss was hit. So this is January's high, January's low. Now, if we go to Fib, starting over here, this is still the high of the year, remember? And okay, I'm thinking now, how can I make this without confusing with too many lines? Like I said, bear with me. This is the first episode. This is the first of this. I'm actually trying to give you a real in-depth explanation of what's happening right here. So, like I said, this is the low of the year, but also keep in mind this is a new month. Right now, remember what I said, market makers make fake moves, beginning of year, end of year, beginning of month, end of month, beginning of quarter, end of quarter, beginning of week, end of week, beginning of day, end of day. So as you can see, psychologically speaking, end of month, market dropped, and beginning of month, market dropped. So fake move, end of the month, inducing sell, fake move, beginning of month, inducing sell, and also 1, 2, 3 levels of drop, right? So that's something to be very mindful of. Now I'm actually gonna remove this because now January is irrelevant. As long as we're measuring the high and low of the year, that's all that matters. But remember, when you're in the next month, you always keep track of the previous month. If you're in the next week, you keep track of the previous week. If you trading today, you look at the highs and lows of yesterday. So for example, if you trade on the PT software, you would see that there is a blue tracer. The blue tracer measures yesterday's high and low, and it is ideal to trade outside of yesterday's blue tracer. So a good example of this is, for example, like when we had this high over here. So technically speaking, this was the blue tracer of last year, and most likely on the 4-hour chart or 1-hour chart, this would be 1-2 trails of rise, and also like it pins to the blueberry, so makes a lot of sense. And then now notice this. This is where it gets very, very tricky and psychological. Most likely, notice how in March, price hit the low, but it almost went back to the high, but it didn't hit the high, right? So let me just remove January's high and low. Also keep in mind, this is still last month's low, right? It's like the psychology behind it. This is still not January's low. This is still Feb's low over here. Whoa. This is still Feb's low. And once again, notice how when before price even broke to the downside, how it broke through, retested, then dropped. And same thing when it came back up, it hit the blueberry, not the blueberry, the 50 EMA, the water. They broke back below the low, and then they broke above it, retested, and then went through. So this was also a zone to be mindful of to see how they would react when they get there. So for example, if you miss this trade, or if you miss the entry here and you're too scared to enter either on this wick here or somewhere along the lines here, your ideal setup would then become, you know, a breakout and retest of the zone. That's how true support and resistance works, right? That's how true support and resistance works. Like I said, the reason why this didn't go all the way up, remember some people hold trades for weeks, months, and years. So most likely there is too much liquidity trapped up here, and that's why market makers didn't reach all the way up here. Notice, and also notice these wicks. Notice how they went up there, grabbed, went up there, grabbed, went up there, grabbed, went up there and grabbed. Same thing over here at the low of the month. Look at this massive wick. They went down, they grabbed all this and went back up. So I'm going to teach you something very, very interesting right now. If you put it on a line chart, you would see there is no wick. What happened to the wick? This is how you measure true support and resistance. As you can see, there was no wick over here. I actually took it on the body. So if I put this back on candles, right? So as you can see, it makes a lot of sense. Now, this is now also the low of March and the low of the year. This stays the high of the year, but this is the high of last month, or the high of March. Okay, so that was the first quarter with the moves that happened. Okay, so just bear with me. So here we have a beginning of a new month, April. So April, May, this is where the new month started. Notice how price didn't come there. And also, if you put this on a line chart, once again, here you have 1, 2 levels of rise. So that explains why price dropped from here, right? So like I said, it's very, very psychological. And also the level which they rejected from was the institutional level, if I'm not mistaken. as you can see, if we put it back on a line chart real quick, notice how this is a round number, more or less. So a round number. Okay, so okay, wait. I don't want to confuse you. Institutional levels are zones which, in my opinion, is very, very accurate and powerful when price reaches it. Institutional levels is also considered where most institutions place their orders, right? So institutional levels look as follows. So for example, you would have 1 point. Okay, so let's start off from a certain point. So let's say that's where price is, right? That's the institutional level because it's a round number. Now you also get the quarter points within the round number, which is, for example, 1.12250, 25 pips. And if you actually study Beat the Market Maker, you would see that the stop and boxes is 25 to 50 pips. So let's say, for example, price trades between, okay, let me just make an example real quick. So let's say this is, I'm just gonna make an example for you real quick. So let's say this is the Asian range between the zone, right? And price is trading within this price 25 pips, which is the ideal range for the Asian range, right? So if we look at stop and box wise, the next stop and will be, okay, the stop and will most likely be at, whoa, wait, I made a mistake here. If price is trading within this range, there should be 1.11750, right? Let's not get confused here. Sorry about that. Then the stop and box would be, and then the other stop and box, depending on the pattern, would then be over here. So this would be then be 11.500, right? So as you can see, you count them in pips of 25, if that makes sense. So that means then your stop and box would be, this would then be your, okay, we're not been, this would then be your first stop and box, and this would be your other stop and box. And then basically you would then wait for price to trade or to bounce into one of these zones information, and then basically you take a trade. My point is, it's best to trade from these levels. So also if you have, let's say you're trading from this point, your ideal stop loss within the 25 pips with a take profit at the low of the day, which would then equal 50 pips with a second take profit in the second stop and box, which would then, right? And then according to the pattern, like, you know, you can also trade back up, maybe back to the initial high of the day. So just the theory behind this, if you took this trade, you would have had a 25 pip stop loss, you would have made 50 to 75 pips. So risk reward 1 to 3, that's decent. So, and also if you went the other way again, you could have picked up another 50 pips to the initial high of the day. Because like I said, also remember, same thing I just explained, if this is your Asian box and this is intraday, they make fake move beginning of day to induce, trap, and then bank a profit, right? So you always wait for a fake move. That's because you can't predict, you know, you don't know where the market is going to go. What I mean by that is, okay, I'm explaining a lot of theory, and I hope this really helps you guys. So I'm gonna remove this, and I'm gonna So let's say this is, your Asian box. Same theory, right? This is your Asian box, waiting for price to break out of this box, right? And price is trading within the range with a stop on box either at 25 to 50 pips and vice versa, right? You don't know if price is going to go up or down, but you can, I wouldn't say predict, because you shouldn't predict the market. You should react to what's given, but you can have a bias as to where market might potentially go, right? See what I did there? So if you have a potential bias, you won't trade what you believe on the pair. So that's what I mean by this. Let's say there is a 50 billion dollars trapped up here, dollar sign, and there is 30 billion up here. So what this then means is there is stop losses placed up here worth 50 billion, and there is buy stops placed up here worth 50 billion, and vice versa. There's stop losses here worth 30 billion and sell stops here worth 30 billion. So the question is, who's getting screwed today by the market makers? Easy. They're going to aim for the money. They're going to pick up $500 billion and bag this money, right? And with this breakout, right, whoever bought here, right, whoever bought, they smiling, they're good. But yeah, here's the thing, like, you know, as long as the broker takes more than he has to give, that's what keeps the market going. That's why most traders lose their money, because some traders donate to the market. They donate in order to pay us, if that makes sense. So with this 50 billion grabbed up here, right, for example, what happens then is price would then either hit some type of support and resistance at this point, and then the question now becomes, who's going to commit their funds? Because now the price is going up. The people who sold, they're like, market's going up, like I should buy, right? But they're being induced. They're following the fake move. So let's say 25 billion commit funds here at the top again. That means whoever lost money over here, so they putting 25 billion up here to keep on buying, but we know this is information, and market makers is going to take his money again. So then in total, market makers with this, they have picked up $75 billion, right? Would you choose $75 billion or $30 billion? I choose 75, right? So whoever then bought at this point, they should be in risk-free, in the trade risk-free, but they should then be in the trade risk-free. But if they didn't lock their profit or take profit, there is still 30 billion to be picked up here at the bottom. So let's say half of them took their profit, and there is still, whoa, and there is still 15 billion, or let's say 10 billion up for grabs here. Market makers going to come pick up this money, right? And then they have 85 billion for the day. And then whoever thinks market is selling and they commit, for example, they end up committing 2 billion to sell, but then we know that market is now in level 3, for example, and it's forming a W formation. market makers will just pick up the money again. So you see how this process works of induce, trap, and bank a profit. So if you don't wait for the market maker to make his move, like you don't get into the market, you know. All right, so let's go back to our charts. So now we are in the second quarter, right? And this is the beginning of the first month in the second quarter, from April to May. And as you can see, from April to May, we didn't really have a lot of movement. We had about a we had about a 270 pip move. It's a lot, but like, you know, long term, it's not a lot of not a lot of pips in a month. So now keep in mind, this is just hold on real quick. Okay, there we go. Now this is the new low of the month. I'm gonna clone this. So this is now the low of April. And same thing, notice how market held the level whenever it got to this point. As you can see, rejected, rejected, rejected. And from, this is the high of the month over here. We didn't really have a lot of movement. So like I said, if in next month you look at the last month's highs and lows, and as you can see, it didn't go all the way up to last month's high. So then this now becomes the new high of the month and the new high of the quarter, while keeping in mind that this is still the high and low of the year. Does it make sense? I hope it does. So now over here we have whoa, I messed up there. My bad. I messed up. I measured too far. So this is April. This is the low of April, and also so far the high of the quarter. Right. So, and as you can see, when price got to the low of the month, how it rejected and basically went through it and stayed within the zone. So if we put this back on the line chart, I'm pretty sure we can see, oh well, from this 1, 2, 3, once again we have 1, and you have 2, as you can see, slightly lower below this point, and then 3, because like I said on the line chart, you actually see the true support and resistance, and you can actually see the true level count. That's also a very, very good way to count your levels. Another thing which could have happened here, as you can see, it's a pin to the blueberry. So market could have also reset at this point. As you can see, fake move beginning of month, fake move beginning of quarter. This is kind of like an information half Batman. And here we have 1 right up until here, 2, 3 levels of drop. Right, it's very, very psychological. So if we move on and we drag our highs and lows from last month, from April to May to June, see that this is still the high of the quarter, right? Remember, this is the high of the quarter. So I'm just going to draw it all the way through, because as you can see, So basically, as you can see, this wasn't really a huge range for price to be trading in. They trade within a 200 or say 300 pip range for 3 months, whereas this was basically a whole 1,200 pip move beginning of the year, right? So there's also Corona beginning of year, Feb. This is when the whole world went under lockdown, so it makes sense why the US dollar dropped at this point. But you know, we have Trump, very, very good businessman. So let's just do this month by month again. So April, we have our highs and lows, fake move beginning of month, fake move end of month. And also notice how they fake move end of month into the beginning of May. Now, like I said, they had 1 hit, 2 hits, and the 3rd hit, it held, kind of broke through, but you know, keep on going. So most likely, this is considered a retest. So whoever keep on selling here, right, you know, according to retail traders, you should follow the trend, because now also support has become resistance. So moving on, this now becomes the new low of the quarter. And also notice how, like I said, this is in May. So we had, put us back on a line chart. Okay, I wouldn't say we have, okay, it looks like 1, 2, 3 levels of rise. So it makes sense why it rejected from the high of the quarter and also a pin to the blueberry. Notice how also they slightly hit above it. So whoever had buy stops up here, right, they got triggered and they got pulled into a loss. So that's the second quarter. Moving on, we are here now, right? We are here. So I'm not gonna do August and September because, like, you know, you understand. I think you understand more or less. But let me just do it. Let me just do it. So this is the high, or this is, so what I'm gonna do now is I'm gonna change this up a little bit, because as you can see here we have new highs and lows. So I'm gonna make this so we have new strike zones. I make it red so we know it's important when price gets there, because we are here in time. So last quarter. And then this is now last quarter. Okay, let me just move this real quick. This is the last quarter's low. Okay, so looking at it from this standpoint, like, so you see why I explained it the way I did, where I went in so much detail month by month, because it will get to a point where, for example, we are here now and we only need the high and low of the year and last quarter's high and low. And you see how much more clean it becomes because you're following the highs and lows properly. So let's move on and actually do the third quarter. So I want to just bring your attention to see how I might be wrong here a little bit. This is actually low. And as you can see, this is an institutional level. Remember what I just explained regarding, oh my word. Like I said, just be with me, my that was really slow. Like I said, remember these round numbers, they really play a big role. Like I said, this is where institutional flow is found. And as you can see, if we go on just hold on. My Wi-Fi is really slow. My bad, guys. And my laptop, I don't know what's happening. So yeah, like I said, notice how this is more or less a quarter point. I'm pretty sure if we move this down a little bit more on the wick, like exactly on the wick, we'd find a quarter point, which is more or less around 16 pips from the quarter number 101,250 and about 16 pips from 101,100. And as you can see from the high of the low of the from the high of the year as well, how it's slightly above the round number. And as you can see here as well, it's 10 pips from the other round number, which is 109,750. And last month's or last quarter's low is actually exactly on an institution level 10600. So that's just something like just to show you that like this is the actual support and resistance, not the shit they teach you on Google. Support and resistance is not exact numbers, you know, but it is zones. So by zones, I mean, if we put this on a line chart, right? Notice there will be no wick. But if I draw a box from the high of the line chart to this, now I have a zone where if price gets there, it might reject. Right? So, and same thing over here. Notice there is no wick. So I put this on, if I measure the zone, now I have, oh my word. Yeah, like I said, guys, my laptop was really slow, my bad, man. So as you can see now, now I have zones, right? Doesn't it now make more sense? Now this is just, I didn't draw zones in the beginning because like it was just gonna confuse you. I want you to keep your charts as clean as possible, because if you have too many lines, many boxes under, you're gonna get confused. So this is the current situation, right? We're trading below this point. So in August, no, July to August, this is, just zoom in a little bit. This is the high of this quarter, of the third quarter, and also the high of July, just the first month, beginning of the quarter, beginning of this quarter. So price hasn't gone there yet. As you can see, there's some likely there's likely a liquidity grab, because as you can see, they kind of pinned to the Mayo. And once again, if we put this on here, as you can see, this is more or less institutional level, because like I said, if you put it on a line chart, there is no wick, right? So if I use this as the body and the high of the quarter, or the high of the month, or last month's high, you can see it never went up there. But still, but since this is the beginning of the quarter, like this is a zone to be mindful of in case price comes here. So I'm gonna make this, I'll make this white. So as you can see as well, how when price came back to this low, you know, this last quarter's low, notice how they bounced off it. They didn't break through, and notice how they actually rejected the zone, right? So here we had them break through the zone, and we had a retest, and price kind of stayed there for 2 days. Now also keep in mind, this is now at the beginning of a new month. So also keep this in mind, notice how this basically went up. So remember, this is a bearish candle, so it opens at top and closes at the bottom. So that means that wick over there, that was most likely a very, very fast move. Grab the orders and get out of there. Fake move beginning of month, right? So if you put this back on the line chart real quick, we might even see 1, 2 clears of drop. And also from a bigger standpoint, you could see this as well from here. Okay, not from here, but maybe from here we market basically reset and didn't go all the way up there. You can still see there is more or less 1, 2, and 3 levels of drop. But you could consider this consolidation because like it stayed in the range. So you could also see this as 1. Here's your second drop. No, I'm wrong. I'm wrong. I'm wrong. No, never mind. Never mind what I just said. Never mind what I just said. I was wrong. Now here's the thing. You might sometimes, it might sometimes happen where you, my bad. Sorry, man. Sorry. I got confused here for a second. So notice how price kept on trading in the zone. It hasn't really broken this point yet. Like it broke through, came back, consolidated, broke through, retested, came back, broke through, retested. So basically, like it's been choppy, you know, it's been choppy, and the price is currently below this point. So just going back to this quarter, this was in July, so this is the first month. This is now the low of the month and also the low of the quarter, right? Do you see how the highs and lows actually play a massive role? Because notice how on point this is. Sorry, I just want to make this straight and make it look neat. So if you put this on a line chart, there's no wick, right? There's no wick. So I'm gonna make this where's my rectangle? Okay. From here to here. This is now a zone, right? Doesn't matter how big the zone is, as long as you enter on the 15-minute chart and according to the pattern, like you should be good. Doesn't matter, like the zone can even be 100 pips. You can trade within the, you can trade within that zone. Like this is more or less a 40 pip zone. So it's right, it's right. Now, if we look at this from, yeah, this is the thing which I got confused with now earlier, because technically speaking, never mind this point over here, this massive drop, because most likely this is fake, because this was more or less time of Corona, so this was something beyond market makers' control. This was Rothschild and Rockefeller, Big Pharma, everyone involved in the coronavirus hoax. There is no virus. There is no virus. Like I said, yeah, this is what kind of confused me, because I saw this from year to year as one drop, and from year as a second drop, and from year as a third drop. But now, like I said, market also could have reset here. So this becomes your first drop, second drop, and then third drop. Right? You know, it's very psychological as long as you can see how the market drops, you know, and like remember, 3 is a psychologically satisfying number. All right, so this is basically top-down analysis for the year. Now we also have to keep in mind that this is the high of July, the high of the quarter. Here we have August, and the high of August is over here. Notice again around number 107. So this is the high of August. We're now in September. Notice as well how price didn't come there in September. But now here's the thing. You must use a line chart sometimes, because that's how you find the true support and resistance. Because now notice if I put this on a line chart over here, and I put back on candles, now this wick would actually hit it, right? So very, very psychological. That was actually nice information, because it was actually spread out over more or less 2 weeks. You know, the bigger the M&W, the more powerful the move is as well. Now we are in September, and this is the low of the month, technically speaking. Or well, this is the new low of the quarter, but I might just put this here. So whenever price comes to this point, I'll know that this is something to be mindful of. So I'll also make this red, but just to I won't make it solid. So I know that, you know, this is a potential zone I might strike from. All right, so September started over here. So this is the high of September, or the high of the month, right over here. So the next zones to be mindful of. Now I'm just gonna go over this again so you can show you. Notice how this level becomes institutional around number 107.00. Notice how the high of the month is 106.500, more or less like 6 pips up, but I mean that's your stop loss more or less. So, and over here as well, we have a round number 106,600. Notice the low of the new low of the month is also around number 104.00.100. Now the next thing to look at, I'm going to 4 hour for next week, so you can see what we can expect. But before that, I'm just going to pause the recording real quick and then come back. Okay, like this makes no sense, because when you watch it, you won't even see it. But I'm gonna take a break for like 2 minutes, and then I'll continue the recording. Okay, now that I'm back, just a quick update. Our first take profit hit on V70 V25 one is, so that's lovely. That's lovely. Like I said, you should join our free channel. I do send out free signals, free analysis. Like I said, like you can see at this video as well, I also do free education, you know, so it's up to you whether you're gonna listen or not. So we're still looking at USD yen. What's this now? Just hold on. Here we go. Now we're on the 4 hour chart, right? So let me just grab my calendar real quick. Now remember, here's the other thing. If you're gonna be trading on, okay, so once you switch your analysis from or time frame from the daily if you go on the 4-hour or 1-hour chart, make sure that you measure out your weeks. So for example, today is 28th, market is opening right over, am I still connected to the Wi-Fi? Just hold on. Okay, cool. Just want to double check. So today is the 28th, which means market opens according to your broker. So here's the other thing, you have to also get your broker's time ribbon, because as you would, I'm sure as you've noticed, not all brokers' time ribbons are the same, and that's meant to confuse you and have you trading at the wrong times. So just keep that in mind. Just keep that in mind. So I'm gonna make this yellow, like I always do. So this is the open of the week, and then I'm only gonna break down. Okay, so I'm gonna break down September week by week, so you have a more clear understanding of how I get my biases and so forth. So last Monday was the 21st. 21st meaning it says the 20th to 9 o'clock, but obviously you know when market opens. And then the week before that was the 14th. And then the beginning of month was on the okay, so then September started on the 1st, but the week started on the 31st, just a Monday. So basically beginning of this month technically started on the 31st. Now I'm gonna make the 31st a different color, just so we know this is where the month actually, or this is where the week started, but the new month started on, whoa, should be yellow. And then the first would then be sorry, I'm getting a bit confused here right now. Okay, so Sunday, Monday was on the 31st. The beginning of a new month was on the okay, now I'm right, I'm not wrong. My bad. So take this week by week. Notice how this is the high of last month, the high of August. Notice how they formed a new high from this point, and as you can see, a line chart from this low of the new month, new week. This is basically 1, 2 levels of rise. So I wouldn't trade this week initially, or with this high formed over here. I initially would have waited for price to actually hit this high and then drop. So there wasn't really a lot of movement within. Oh, I see my mistake. I made. There's a huge time separation here. I want to say something's wrong. So this was an extra week at this point. Now it looks better. So this was the first week of September. not really a lot of movement. And also remember fake move beginning of month. The second week started over here. As you can see, they were trading on this range. Like I said, they've basically been consolidating in this range and like just holding it. So initially I would have waited for a clear breakout, retest, and then buy, or clear breakout to the downside, retest, and then sell. And I didn't have any of that. So over here though, we saw that price came to a point of interest of ours, which was on this was basically last quarter's low, right? So this is why I say measure your highs and lows. As you can see now, I know that when price hit this point, I would have been interested in something. So if we also put this back on the line chart, as you can see from the table, basically have one consolidation. We have two. I wouldn't consider that consolidation because of this. I would consider counting this according to the candles then, because here we have 1, 2, 3 consolidate. And then here we have, out of the range, we basically have 1, 2, 3 consolidate. So this would be my level 2. And then usually from level 2 to level 3, you have 1, 2, 3 inducing pumps to induce people to sell. And most likely because since this was a low over here, people probably have had sell stops over here. I mean, yeah, sell stops over here. So they got activated and got pulled away, right? So makes sense. So initially your entry would have been on the, this is so funny because it's actually 1, 2, 3 vectors, confirmation candle and breakout. Although they say that you should enter on a confirmation candle, but like if you entered on, this would have been too big of a stop loss if you took the entry at this point, right? So let me just make this a different color. So let's say you took the entry here, like you would have had a massive stop loss. Your stop loss would have been 68 pips. I would never use stop loss that big. That's like just donating your account to the broker. But like, here's my advice. Whenever you find yourself in a situation like this, where you find that there has been a shift candle meaning a very, very strong impulse to market make a move, I usually count the pips of the candle. So the whole candle, the high and low, that is 74 pips, or say about 75 pips, right? What I then do is, since this candle is very, very big, I measure it and then I break the candle in half. So on TradingView, you have the time and date option or tool. And as you can see, if I break this in half at this point, I'll make this green. I'll make it a little bit thicker so we can see it. So as you can see at this point, notice how if you break the candle in half, this would have been your entry then, as you can see, rejected, rejected. And most likely, because you put in the line chart real quick, most likely it will add up with the first leg, which is more or less over here. See, like this is something to be mindful of, because you have a W initially. Let me just show you this. Initially, this is your W formation, right? Whoa, that's ugly. Like I said, initially you would have your W formation right over here. Whoa. My laptop is really slow, that's why it's doing that. My bad, my bad. Okay, let's try this again. So this would have been your first leg, and this would have been your second leg extended, right? So on the TDI, you would have divergence, prices going down, but the TDI is going up. Also, if you look at it from another standpoint, it could also become like a head and shoulder formation, meaning this is the first shoulder, this becomes the head, this becomes the second shoulder. So but technically it is a W formation. This is also considered a stop hunt to the neckline of the W, because technically speaking, this is the neckline of the W formation. And notice how it also adds up with that zone. Whoa. Right, so see how simple it is to actually trade, like, as long as you stick to the simple things. Now this is last week's low. This is last week's high. So I'm gonna just measure this level out and make it like I said, I like to keep my charts neat, so I know exactly what I'm looking for. Okay, I'm gonna make this blue, and also it's more or less institutional level, so we could see some type of movement. So basically, if I just put this back on a line chart real quick, yeah, basically have 1, 2. This can't be 3 levels of rise. This is most likely level 2 consolidation. So let's go on the 1 hour chart. Here's the other thing. If your level count isn't visible on your 4 hour or daily, try going on your 1 hour. You might see it better. So yeah, let's see what's happening here. So basically this is a W formation. We could consider this level 1 consolidation. I just want to make sure if we had a crossover of the EMAs. So my 50 EMA should be the red. Okay, so here we do have a crossover of the EMAs. Actually, no, I'm wrong. They should be blue. Should be blue. I'm just trying to figure out where peak formation is locked. But it's 1, 2, 3 consolidation, stop hunt. 1, 2, 3 consolidation. Okay, okay. Here's how I see it. Here's how I see it. It's either this is consolidation level 1, and all of this is level 2 consolidation, or this is still part of level 3, the stop under the neckline, head and shoulder formation / W, and this could be level 1 consolidation, and this could be level 2 consolidation. And what I mean by that is, so here we have 1, 2, 3 candles and price consolidates, right? So notice how price then holds the zone, right? This is how price holds the zone. And from here we have basically a breakout retest on the Mayo, and we have 1, 2, 3 rise and basically consolidating again. So technically speaking, this could all be level 2 consolidation, and we could see price go all the way up. But before it does go up, this is what I think might happen on seeing that it's spinning to the blueberry, and it basically just hit when market opened. Basically, it hit last week's high and kind of dropped right now. But I have to wait 4 hours for market to be open in order to have a potential bias. Because, like, think about it this way, like right now when market opened, so many people send signals and analysis, like so many people entered trades right here. So a lot of people are buying, a lot of people are selling, but the question is who is trapped, So what I'm trying to say is we have to wait and see what market does, because remember, this is a high right here, and this is part of last quarter's low. Now, initially we are on level 2 consolidation, so let me just see something real quick. Regarding institutional levels. 10500, that's 50 pips. This is a very, very interesting zone, because we could see price come here as a stop hand. So I'm gonna just leave this as a potential strike zone. So if price comes here, I could potentially react on it. And then also I would then wait for price to come over here. So initially why I say this point is because think about it this way. If price breaks below the 250 EMA, obviously according to the retail textbook, you're now a seller, right? So then we know that the breakout beginning of week is a fake move. So if they can do something like this, that would be lovely, because then you could also see it as W, V, V, and then M, right? So if you're familiar with BTMM, like that's what you could be looking for. So this is what I'm predicting on USD yen right now at the moment. I would love to see a reaction to this point and then maybe buy, because like I said, institutional flow, or beginning of week, if price decides to go up overnight and hit this point, forming a new high, and it holds, we could then see some type of short rejection from here, then maybe till here or up until here. But I doubt they're going to come back here, because I mean, this is technically a massive W formation, right? So potential zone could be then here, and then fake move beginning of week, continue the pattern from here, and then go up, right? You know, so like I said, it's very, very psychological. So initially my bias is long on USD yen, but like not now, obviously we have to wait for entry to present itself. So we have to wait and see what happens. I'm waiting for my next 2 4-hour candles so I can actually determine where price will go, because like I said, it's very potential that price might stop and low before going to this point over here, because look where the blueberry is. Like it has to go fetch it at some point. And then we might even have a rejection. So if you miss this trade, the next zone could then be something like this to get into the trade. Retest and then go up. All right, so this is something to be, that is something to look out for. So even if they do go all the way through, maybe tomorrow or tonight, we should just wait for a retest, wait for it to hold a level, and then buy, right? So like I said, institutional flow. So if they do go up, retest this and retest this point, we could then see them potentially hitting a zone, more or less the zone here as a what's the word, as a strike zone potential, you know. So I could do something like this. Where's my, can't seem to find my tools. Here it is. So then seeing that, okay, so this is the whole of September. This is the low of the month, high of the month. And like I said, this looks like 2 levels of rise. So you could see stop and low and then rise. So yeah, you just have to see what happens and react to what's given. But most likely we have to keep in mind these zones where these wicks are. Let me show you the line chart real quick so I can see something. All right, so I'm going to add one more zone to this, but don't get confused. Okay, don't get confused. So this will only be, I will only consider this zone if they do break above this point and then retest, you know, and then this whole zone become a point for me to look forward to get into the trade. Because also think about it this way, if they do go up, I just think about it this way real quick. Okay, so I'm gonna move these arrows just so we can have a more clean chart real quick, because this is the potential we're looking at. So even if they they do break this point all the way, we can still get interest rate here and buy, because since we're in level 2 consolidation, in level 2 most likely you find pins to the Mayo. So that means the 200 EMA could then, since it's here right now, okay, so I'm just going to draw a white line, right, as the 200 EMA potential. If price does go up, obviously the EMA has to follow, right? So we could then see the EMA do something like this. Like, do you get what I'm trying to say? So that will then allow this move to happen. Like this. And then we would have a pin. Whoa. Okay, hold on. Guys, I'm really sorry. My Wi-Fi is bugging out. My laptop is bugging out. So like I said, then we could see something like this happen. Hit the EMA as another confirmation and confluence, and then basically hit the 800 EMA as well as a new high, which was established as the initial high of the month. So the initial high of the month is the next target. So if we buy from here till here, that's 50 pips. Till here, that's 100 pips. And if we go to the last quarter, or not last quarter, last month, last month's high is basically this point where the 800 EMA will be. And if they do go all the way, we could even see price go all the way up, because technically speaking, like, you know, there's a lot of things to happen. Like market could reset over here on the 15-minute chart, 1 minute or 1 hour chart, forming the new peak formation low, you know, something like, or look something like this, if that makes sense. Look something like this and go up, continue the trend. Now, this is something we could be looking for. This is actually the ideal setup I would be looking for. So it's either that potential, or we see price hit this point and then basically go up. So that's something to be looking for. Now that's the analysis on UJ. I hope what I just explained makes a lot of sense. I hope you implement this into your trading, because it's a very, very simple way to find strike zones, you know. So for now, just to keep my charts clean for when I come back, I'm gonna remove this, and this is what I've been looking for. So I'll update you on this during the week in the free channel. That is it. Don't forget to like and subscribe. Like the video and subscribe. Reason being, it will help the algorithm push this video to other traders, because, like, you know, what's happening right now at the moment is people aren't learning how to actually trade. They're learning things you can see on baby pips, and that's not accurate because it's controlled by market makers, you know. So like the video, share with your friends, and if you have any questions, message me, you know, feel free to message me. I wish you all a purple week, and I'll see you guys next time.